morning, ladies and gentlemen. I'm your host, Sharon Mandia, and you're watching Living with S. Now, to break the week, we're getting into a world that I'm willing to bet is unfamiliar to a lot of us. That is the world of Forex trading. Do we really know what goes on? And that's why we invited the expert. We've got Joshua Matumo, who's the MD of 4th Street Consultant, but he's also a Forex trading coach and mentor. So, Joshua, good morning.
Good morning to you.
How are you feeling today?
It's a good day.
It's a good day. It's a little chilly.
It's a little chilly, but
yeah, it's a good day.
Yeah.
You did actually even point out how great the view is from up
I
here.
love the
yeah,
view.
we're at Park Inn by Radisson, by the way.
Yeah.
Great view from 11th floor. But now let's dive deep into the world of Forex trading. I'll be the first to admit I don't know much about this. But that's why I'm excited, because I really and truly will be starting from scratch when it comes to you breaking down what you do for a living.
Yeah.
But before we get into that, can you tell me about your journey? Did you always know that you would get into this world of Forex trading and money and trying to build, asset
First of all,
portfolio?
I actually hope I make you a trader by the end of the interview.
Oh, you want to make me a trader by the end?
Yeah.
Okay, let's see.
Then I started trading a while ago when I was in college at Strathmore.
Okay.
So it was actually random. Because I was in the library doing assignments and listening to some economics videos, and then a video pops out like, did you know you can make money trading online? And so that got me curious.
Okay.
So I started researching, and that's for the start of the journey.
So what were you studying at Strathmore?
I was doing accounts.
Accounts?
Yes.
Oh, so numbers was familiar to you?
It was familiar, but I came to learn a little later that it wasn't even a numbers game.
Oh, really?
It's more of an art, actually.
An art?
It's an art.
An art. Okay.
Yeah,
All right. Okay.
yeah,
So
yeah.
can you break down what this art is? What is Forex trading?
Forex trading in layman terms is just the exchange of currencies. You know, like the way you have some dollars and you want to go exchange and get some Kenya shillings or get some euros in case you're traveling. That's basically Forex. But then us, we dive deeper into exchanging different international currencies at different market prices. And so what we do is we take advantage of the difference in the pricing. So we exchange one currency for another. For instance, if we have pounds, we exchange pounds for euro. And so if it's buying and selling of currencies and commodities. So if I bought low and sold a little bit high, I make a margin. So I make the multiplication of how much I sold, then I have my profits.
Right.
Yeah.
So interesting that you said it's the buying and selling of currencies and commodities.
And commodities.
So it's not just currencies.
It's not just currencies. We trade crude oil in Forex. We trade gold in Forex.
Okay.
Yeah.
So what are the different things that you can trade? Because I'm sure there's a limit. You can't be trading bread and milk.
Yeah.
So what are you looking for? What are you allowed to trade?
Well, personally, and what we train people to do is we train in major currencies. We call them the majors. The majors are the currencies of major economies. We're talking about the Great Britain pound, we're talking about the euro, we're talking about the Australian dollar, we're talking about the New Zealand dollar.
The American dollar.
Yeah, the US dollar that's like the SI unit for the Forex trading. And then of course we mash it up with gold as well and oil.
Gold and oil.
Yeah, they're all traded in the Forex market.
Okay.
They are valued in terms of the dollars. So no pressure about getting to, to find out how much oil is selling at. It's valued in terms of dollars already for you.
Okay.
Yeah.
Okay. Wow, I think I'm getting it, but pardon me if I keep asking questions and you're like, what are you? So why gold and oil? Is it because it's a finite resource?
Yeah.
Why those two?
Basically, for those who know even a little bit about Forex trading, they know that you make money out of volatility.
Okay.
When the currency, even in the stocks market, it's only when the currencies and the stocks are moving up and down, that's when you get to sell and buy to make money. And so for gold, it's a globally accepted commodity, and the valuation is a bit high, and therefore there's a lot of opportunities between gold and oil. It's widely traded, and so it's volatile in the market, and so it's in the differences when it's moving that you get to make money. So it's a personal choice that you get to choose what to trade in the Forex market.
Okay.
Yes.
So in order for you to make money, you ought to ideally buy when it's low and sell when it's high.
Now, even better, in Forex, you don't have to necessarily buy when it's low.
Okay.
You can make money both ways. if you want to make money when the market is going down,
Yeah.
you sell.
Okay.
If you want to make money when the market is going up, you buy. So all you do is analyze the markets, look for opportunities, and this is what we train people to do at our company.
Okay. So what's the difference between Forex trading and the stock market?
Now,
Or the money market.
the latter is what you were explaining. The stock markets, you have to buy low. You have to buy low, then wait for some appreciation, and then sell high.
Right.
That's when you make money.
Right.
And then you have to again time, and then again for the stock to come a little bit low, and then you buy again, and then you sell high. The Forex market is wider. It's we have a platform where we trade Forex. It's called the MetaTrader platform, and all these currencies and commodities.
Is that an international platform?
It's
or
an international platform.
Okay.
For instance, for those investing in the NSE, you need a CDS account in order to deposit, and then you can always check on the stocks and buy and sell.
Yeah.
Now, for Forex traders, we deposit money with brokers, and then you get the account, the MetaTrader account.
So there is
there's a medium.
A medium,
yes,
right.
where you deposit your funds in order to trade them. So that's a channel. That's what gives you the leeway or access to the Forex market. So you just deposit your funds with a brokerage firm.
Okay.
And we're privileged to have 2 brokerage firms in Kenya.
Okay.
Yeah.
Okay.
So, and then of course you can access your funds online. And then what you need is the skill to analyze the market, because it's all online.
Okay, all right, it's all online.
Yeah.
So by depositing your funds with the brokers, it doesn't mean you're saying, hey, take my money, I'm going to wait 3 months for my 20%.
No, there's a point on that. We have 2 types of brokers. We have the dealing broker and the non-dealing broker.
Okay.
The dealing broker has a license. That is, if you strike a deal to trade on behalf of, on your behalf. A non-dealing broker only gives you the access, so you need the skill to trade. Yeah.
So let's deal with the non-dealing broker first before we try and figure out how to get the right dealing broker so we don't get conned.
Yeah.
But so with the non-dealing broker, you're saying you deposit the funds, but then you have to have certain skill sets, an analytic mind. What can you take me through how you even acquired these skill sets? What did you need to learn or study in order to understand this space?
Now, I think to explain that better, it's important for me to explain how the Forex market works and what we teach at our company.
Okay.
We teach willing people to learn how to analyze markets using price action. Price action is patterns that form as the market moves. Forex, the reason I was saying it's an art, it's based on the fact that history repeats itself.
Okay.
Certain patterns that have happened before are going to happen now, and they're going to happen again. So we train people to master these patterns. So when this pattern happens, what is next? The market is going up, so I buy. So when this other pattern happens, we know that we're getting ready to sell because the market is about to go low. So that's price action. And that's a skill we teach.
You have to be a historian of sorts.
It's all in the charts, though. You don't have to read and everything. It's in the charts, in the Forex charts.
And the Forex charts have what? They say, can you give me an example of what that chart would it say?
The chart is basically a graphical representation of the price.
Okay.
It's just a price, how the markets are moving. You see how the NSE has these indications of price going up and down. That's the same thing.
But I'm sure it was it was responding to something in the economy.
Price.
Maybe a change, a change in governance, or what is it? What is causing that fluctuation?
Buyers and sellers. Every time, let's say I place an order, I have influence on the market because I've put my money is running in the market. Another trader in Washington does a trade. Another trader at the bank does a trade. And so this is what keeps the markets moving. And then financial news as well.
Okay.
Let's say, the US has announced a major policy of the economy, and people think it's going to affect the dollar in a positive way, then traders are more likely to buy the dollar. So news as well affect the markets.
Okay.
So there's a couple of factors, but everything is represented in the charts because that's where the prices move.
Okay.
And that's what we teach people, to read the charts.
Okay, so I wish I had a chart in front of me because I don't know if the questions I'm asking seem a little ridiculous to you, but I'm just wondering, these charts, maybe they date back 20, 30 years,
Sure,
right?
sure.
So is it that you're seeing that this season, this is generally what happens, that it just goes up, or is it based on like what besides?
That's actually you're getting it.
So it's a season.
It's days and hours and it's dates, as you say.
Yeah.
It dates back to about 30, 40 years.
Oh, okay.
And so you can always go back and check over last year, how did the stock market, how did this pair do? What was the chart pattern that created on this pair? So for example, let's say assuming today is a Monday, yeah, it's let's say it's 10 or 11 or 12.
Yeah.
So that means this is the current market price. Like if we're looking at the chart, then we have the current market price.
Okay.
And so you can always now go back and analyze the patterns, and you kind of decipher what is been happening on this pair. And so if a certain chart pattern happened 2 weeks ago, and it happens now, then you always have to make a decision on whether to buy. It informs you on which decision to do, whether to buy or sell.
Yeah.
That's a skill.
Okay. So what you're saying is, if I wanted to know what to do right now, I can go back to 7 years ago and look at the Monday in July at 10 a.m. and see, what was happening there? What happened? And then make a decision based off of that?
Actually, we approach it more like we approach it in an analytical time frame view, like on a daily, on a weekly, on a monthly. Like last month, how did the charts do? The last 6 months, how did the charts do? The last 1 week, how has been the trend? Has it been up?
Okay.
Or is it going to be down this week?
Right.
And so price action is what informs you to make decisions on trading, depending on where do you see this market going.
Right.
Is it down or up?
So whether to buy or to sell.
To buy or sell.
So this, I guess, then your work involves a lot of speculation.
That's why you need the skill. That's where the skill comes in.
Okay.
Now, price action is basically the skill to learn and study the charts and the patterns in order to interpret them in your favor.
Okay, so that it's more informed.
Yes.
But it's still, to a good extent, speculative,
yes, it is.
Isn't it?
Yes, it is.
Because you're trying to see, to try and understand, like, based off of this, what is most likely.
Yeah.
It's like you become a scientist almost.
Let me give you a real life example.
Okay.
Let's say we know we have seasons, right?
Yeah.
There's a rainy season.
Yeah.
There is hot season.
Right.
But even in the rainy season, you get 2 weeks of hot sun.
Yeah.
That's the kind of, so you know what's gonna happen, but you need the skill to decipher. Okay, I woke up today, but it should be cold, but it's hot.
Yeah.
Yeah. So that's where the skill comes in. So you already know what's going to happen. The markets are always moving up and down, but you need the skill to actually decipher where is it really headed. Can I take advantage of this information to buy or sell to make money?
Okay.
Yeah.
All right.
Yeah.
So, I mean, I can imagine that it must have looked and been very different 30, 40 years ago compared to where things are today.
Yeah.
Things like technology, things like different administrations in government, in these like big countries. You know, the seven. Is it? Did you say 7 countries, or how many countries?
The G7.
The G7, the Great Seven. So there's a lot that's happened over the last 30 years, and even just an influx of more traders coming into the space because you have access to the information. Has that in any way changed that chart that you're talking about, or is it still something that is relatively?
Now, there's something. Today you're getting a lot of lessons, including psychology, technical stuff. So there's one thing about human beings. Behaviors rarely change. Greed rarely changes. Fear rarely changes. And so people trade out of these emotions. Those rarely changes. However, what has changed over the years is the number of traders, the amount of capital invested, and access to information. That has changed. It has grown, and it's for the better. Because more money, more volatility, more opportunities. But human behavior, human behavior, it doesn't change. If people are fearful about the dollar hurting, they're gonna sell off the dollar. If people think this is a good time to buy the dollar, they're gonna buy the dollar out of greed. Greed, fear, that doesn't change.
Interesting.
Yeah, but
okay. Well, we've got to take a break. We'll be right back with more from Joshua and the whole online trading Forex business. We'll be back in a moment. Welcome back, everybody. I've got Joshua Matumo, who's a Forex trading coach and mentor, and he's also the MD of 4th Street Consultant. We're getting to know all about Forex trading. And before the break, you said something that really caught my attention, and that is this space you're in, this world that you're in, is really about managing two emotions, fear and greed. Because fear checks in when you think, oh, it's going down, I'm about to lose. Greed checks in when you're like, haha, I'm about to make that money. So how do you do that? How do you start to make decisions that are really more about just managing the assets and also managing your emotions too? Is it possible to separate, or is it important to tap into those emotions?
It's really important, actually. I think one of the things that my career has helped shape is the discipline of controlling your fear and your greed.
Okay.
Human beings are born with an inborn trait of greed. You steal this deal, you want the next. You make this money, you want more. You get this car, you want a bigger one. So it's a natural trait that we're born with. Yeah. But that works against you in Forex trading, as well as fear. So what we advise is that the level of discipline required to make money in Forex is very high. Because even when things are looking really good, you shouldn't go beyond your limit of how much you're risking per trade. And that's a discipline that's required in Forex. And therefore, and your fear, again, when a trade is losing, don't panic into it and you're watching your money go down, but you have a limit, because the beauty of Forex is that it gives you a platform to control and put a limit as to how much you can lose at any one trade. And therefore, it gives you that. All those parameters are there. You limit a percentage of how much you can lose in every single trade. So no matter whether you're online or not, you're covered. You already put your limit. So you know in your mind that if this trade goes against me, I'm not going to lose more than 2%. And in my mind, I know if this trade works for me, I'm going to make 6%, which is 3 times of 2%.
Right.
Risk reward.
Oh, wow.
So these are some of the elements that we teach people. But again, the issue of fear and greed, that is something that you have to master. It's a psychological thing. And so apart from the making money part of the business, it also helps you grow as a human being to really learn how to control your fear and your greed.
Right. Yeah. You've talked about making money a few times now. Can you make good money off of Forex trading and sort of almost just survive off of that, of the money that's coming in? Can people do that, or is it?
People can make money.
Is it only for the rich, or how does it work?
Well, the thing is, to be really honest, you need money to make some money. Yeah. But the idea and the fallacy out there that a lot of people have, they think that, you're going to jump into Forex and tomorrow you're making a killing. Yeah. The realistic part is that Forex is a business like any other. And that's how we approach it. And in our course, we teach people the limits of how much you can risk per trade. And therefore, you can make it a full-time business consistently, monthly, month to month. But of course, you need a little bit of a significant amount of capital to use to make that money. Same way you have, money that you trade in the NSE. So, and the shares make prices of a little bit of exchange. So you need a significant capital, a little bit of a significant capital. That is, if you want to make it full-time, a full-time career. But yes, I've lived off it. 11 years later, I've lived off it. I live off it. We started the company off it. I was able to drive here off it. So it's purely, you can make a living purely out of it. Yes.
So earlier we were talking about there's two kinds of brokers. The one where you, dealing and the non-dealing. So let's talk about the dealing brokers, right? Yeah. Because I'm sure there's people who are curious about this, but they're not going to study and go to. By the way, did you study Forex trading at all? Did you have to take a course or anything?
I have done several courses. Online, mostly.
Okay, online. Yeah. So there are people who are like, I'm really not that invested. So help me find a dealer.
Yeah.
What do you look for when you're trying to find a dealing broker
Dealing broker.
in this
Actually,
business?
there's a lot of fraudulers out there,
Yeah.
even dealing and also non-dealing. And one of the
Okay.
ways to check for a legitimate broker
Yeah.
is to, every country has its list of legitimate brokers.
Okay.
Like if you Google legitimate non-dealing brokers in Kenya,
Yeah.
you're gonna get, but unfortunately we don't have one. We don't have a dealing broker in Kenya yet.
Okay.
But we have 2 non-dealing brokers.
Okay.
So it's a bit unfortunate, but you know, there are other international dealing brokers out there that you can always access. But the number one thing you always need to do is check which country the broker is, and then check the list, whether they're in the list of the licensed brokers in the country.
Okay.
Yeah.
So in this case, if we don't have that list, are there still people who are dealing brokers? People or dealing, yeah, dealing
Traders
brokers,
trading on
dealing
behalf of
yeah.
I think what you
Or what's, I mean, I guess my question is, just because they're not on a list, does it mean that they do not exist, or are there people who are still
yeah. I think-
dealing brokers,
Yeah.
but they're just not certified?
Yeah, I think I get you right, because what you're asking is whether there are people who trade on behalf of people.
Yes, right.
No,
yeah, okay.
that's a good thing, because in Kenya,
Yeah.
the Capital Markets Authority, CMA,
Yeah.
came up with regulations about 2 years ago.
Okay.
And so there are laws. There's a law governing, if I want to trade on behalf of people, there's a law governing that. I need a license with the Capital Markets Authority. And so this license, of course, is documentation, and there's a whole process you go through to acquire the license. And when you have the license, then the law allows you to trade on behalf of people. And therefore,
Okay.
it's a license people out there can get. That is, if you're knowledgeable and you have years of experience and you can honestly grow money for people,
Right.
then you can go for the license.
Right. So
Yeah.
is that something that you offer as well?
We are working on getting the license. We
Okay.
haven't gotten the license
Okay.
yet. So right now, we're just basically majoring with training.
All right.
Training
okay.
people to empower themselves,
So-
to trade
okay.
on behalf of themselves.
Okay.
But we're working on getting the license as well.
Right.
Yeah.
Would you advise even the customers who are going to these traders, would you advise that they also do some kind of research, or have some kind of understanding about the industry and the market?
Definitely.
Or is it okay to just hand your money over?
No. It's always good to understand the industry where you're putting your money.
Okay.
So I would advise people to do their own research.
Yeah.
Just check around. But now the disadvantage with that is that there's a lot of clustered information about forex trading
Okay.
when you go online.
Yeah.
And so I think the thing it's a policy I actually have. I love going to the professional. If
Okay.
I want to invest in NSE, I want an NSE professional.
Right.
So if you want to invest in Forex, get a Forex professional to get you through. If you want to see a doc, get a proper doctor.
Yeah.
Like, I believe in, following professionalism.
Yeah.
And therefore, I think it's good for people to get adequate information of where they want to put their money.
Right.
Yeah.
So what's the minimum amount of money that one can start trading?
That's a good question.
Yeah.
The minimum, different brokers have different limits,
Uh-huh.
but it varies between $100 to $200. You can
Okay.
start off with $100 or $200. You're good to start off.
Okay. And so I know it's hard to give me an exact figure, but on average, what are the kind of returns that one can expect, or losses as well,
yeah.
in a 3-month period, 6-month period,
Yeah.
1 year?
Wow, that's a tricky one, as you
Okay.
say. But
Yeah.
to be really honest, I can only give ranges,
Yeah.
and this depends on a quarter or a month might be different, just like any other business.
Right, yeah,
This
yeah.
month the market might have been a bit slow
Yeah.
and less of opportunities. Next month there might be more opportunities.
Okay.
But let's say in a month, if you're good and you're good at controlling your risk and you're good at what you do,
Yeah.
then you can make anything between 2 to 6%.
Okay.
2 to 6%.
It's interesting. As I was doing my research,
Mm-hmm.
preparing for this show, I came across a story about a company
Mm-hmm.
that was offering. I think their minimum buy-in was like 100,000, and they were promising 20% every month. but then you have to lock your money in for 3 months. And of course, it seemed to be some kind of Ponzi scheme, because you also you could get 5% off the next person you bring in. And so how do you know when things, and that sounds good, 20% in
Now,
like every month? It just sounds like,
a lot of people are gonna hate me for this,
Okay.
but it doesn't work. It doesn't work. Anybody who promises you exorbitant rates, I don't know, 20% per month, 5% per month, it doesn't work.
Right.
You know why? Because next month, I don't know how much I'm gonna make, but I'm gonna make some money. So how can I come tell people that I'm gonna offer you 10%? It's a business like any other. And if I'm promising you this much returns, then it means I'm also going to risk this much of your money, and the risk of ruin is very high. And therefore, what we teach is a conservative risk approach. That's why our levels are a bit low. I'm talking about 2% per month, 3%, 4%, 5% on a good month. And therefore, how can I offer you 5% if that's what I'm making, or I'm making 2%?
Right.
That means I'll be risking a lot, a bit higher than the threshold that I'm supposed to risk.
Right.
And therefore, I tell people, you know, as we started by saying, you know, greed, there's this greed in us, and it's okay because it kind of pushes you to go for the next deal and the next one, but you have to be as realistic as possible.
Right.
It's a business.
Right.
There's no way you're gonna make, you know, $1 million overnight or by a week, or someone is gonna promise you 20%. Let me tell you, if I was doing a business that I'm making 20% per month, I would have no business looking for people's money. But as I said, it's a business like any other. People need to be realistic about it. And therefore, if especially you take it as a business as we do, and for the long term, then you have to be disciplined about it.
Right.
And you can make that much.
Okay.
Yeah.
So what are the questions that one should ask their trader so as to make sure they're not being scammed? Like, what kind of questions would you then advise clients? This is what you need to know.
I think it's a good thing that the government came into the industry to regulate it in the first place, and therefore it's very clear. If I'm proclaiming that I'm a trader, then I need to show you my license. And after I show you my license, you can confirm with Capital Markets Authority that I'm actually licensed to trade on your behalf. That's the first thing. Then the other thing is ask them for their FX books. That is their statements. Their statements. Get to verify.
They will give?
Well, if they are genuine enough, they're going to give. And then, of course, you're going to see the company, and then you can verify that. But verify the company itself, the broker. Itself. But the surest way is to ask for the license from CMA. If they're licensed, then is a genuine company. And I think I know of one company so far. So that's the thing. People need to be aware of the industry. A lot of people going out there purporting, I'm a Forex trader, I can make you 10% per month, I can make you the other. IPT, I hear all these stories, and I feel for them. But you can learn by yourself. Do it. Why not learn? Do it by yourself.
I guess. I mean, I think you said it earlier. I think anywhere where you're investing your money, you need to know what's happening, and not just be like, I'll just give my money $100, $200, and we'll see what happens. You're right. All right, we've got to take a break. We'll be back with assumptions about this industry, and then we'll get Joshua to debunk them. Is it true or is it not true? We'll be back in a moment. Welcome back, everybody. To wrap up our conversation with Joshua about the online Forex trading space, I've got a bunch of assumptions and questions and myths that I would like for you to debunk. The first one is based off of a conversation we're having before the break, that on average you get between 2% and
2 to 6% a month on your capital.
Oh yeah, a month on your capital. But I did read a story about a woman who had put in 200,000 shillings, made that 200,000 shillings back within 24 hours. So she was now standing at 400,000. But then she went to sleep, woke up the next morning, poof, it was all gone. So how does it, I thought it was only 2 to 6%. How is it that you can make double your money?
No, when you talk about 2 to 6%, we're talking about disciplined trading. And therefore, if you have 200,000 Kenya shillings, it means you you have actually, before you even start trading, you have a predetermined plan.
Okay.
And so I won't place more than 2 positions. And in these 2 positions, I'm not going to risk more than 5% of my capital. Okay? So as I go to sleep, I know in my mind, in these 2 trades that are running, I've only risked 5%. And there are parameters to set that you can't go, you can lose beyond that. That's a
But
discipline.
you also can't make beyond 5%. Is that how it works?
No, really. There's a limit of the loss, and there's where you set the target of what you're targeting to make.
Okay.
Normally, the rule is if you if you're risking 2%,
Yeah.
make sure what you're targeting is double. That is 4% or 6%.
Okay.
Risk reward. We call it risk reward.
Okay.
And therefore, if you're following these rules to set up your risk
Yeah.
reward, then there's no way you can make 200 or double your money in a night, because this amount that you're risking of 2% is very little to double your account. But then again, your money is safe.
Right.
You get.
So you
it's
can
a
sleep
discipline.
at night.
But if
Yeah.
you're greedy, there are parameters that you can ignore to use these parameters.
Yeah.
You can ignore to use them because you think you can double your account.
Right.
So this is what we teach about risk control,
Okay.
about the right psychology. Stick to the rules. Let's teach you the rules. Don't double it, but make a little over time.
Over time.
Just grow the money.
Okay.
Yeah.
All right.
Yeah.
Another assumption we came across: Forex trading is a lot like gambling.
No.
It's not,
no.
You're not gambling. You're
No,
not like,
no, no, no. Let me-
But gambling does have those 2 emotions: fear and greed. No.
If you ask me,
Yeah.
every business has.
You're
every
right,
business
you're
has.
right,
Because
you're right, yeah.
if today I
right.
wanted to start a restaurant business,
Yeah.
I need to. Did you know that they actually do the maths of the salt, the gas they use to cook the meal,
Yeah.
every tiny detail.
Yeah.
If you don't have that detail and you're going into the restaurant business, you're not going to hack it.
Right.
You get? And so every business has its share of risk. What you need is the right information. Do your research. If you need a course, take it. Just master what you're getting into, learn the disciplines, learn the risks, and then learn to control the risks.
Okay.
Yeah.
Okay.
That's
so
the
it's
point.
so it's not the same as gambling.
No, it's not the same as gambling.
Okay.
But if you want to make it gambling, it's going to be gambling. If you don't control your risk, it's
Yeah.
going to be gambling
Yeah,
for you.
where you can win it all or
Yeah.
lose it all.
Yeah.
So another one: online forex trading is related to cryptocurrency.
It's a bit of a tricky one, because cryptocurrency is a class of currency that are traded in the forex market.
What? Wait, I thought you were going to say for sure it's not. Because from like the little I've learned about cryptocurrency, it's like
Yeah.
a whole other
Yeah,
world.
as the term called it, it's currency. It's just a class of currencies. It's a new
Yeah.
class of currencies called
That's-
cryptocurrencies.
right. That's different from the traditional
Traditional
understanding
exactly
of like actual
of
money
the actual money and
or
everything.
even gold.
Yeah.
So I thought it was different. But you're saying
It's traded
cryptocurrency-
in the forex markets, but if you wanted my advice, we
Okay.
don't teach people on cryptocurrencies, and we don't advise our students to, unless you really want. But we have our reasons for not trading cryptocurrencies.
Okay.
Because the thing is, we feel that cryptocurrencies only came to the market the other day.
Yeah.
It's less than 15.
4 years.
No, it's
Oh,
actually
yeah.
about 10,
Okay,
10, 10
okay.
years. We just
Oh,
got to
I
learn
think I
about
already
it
heard about
the other
it
day.
4
We just
years
got to
ago.
learn it
Yeah.
about the other day. And therefore, when you talk about price action, you talk about going back into the days,
Yeah.
trying to analyze what the trend of this market over the last 30, 40 years. Cryptocurrencies doesn't
It's
have that
so
long
new.
of a trend to analyze
Right.
it. And therefore, and then the volatility is crazy, because 1 minute is gonna shoot up, the other minute, tomorrow you're waking up, it's on the down low, because
But
there's
isn't that
not
what
a
you said? Didn't you say volatility is good in this
volatility
space?
is good.
Yeah.
Crazy crypto volatility is not good.
It's on another level.
Yeah, it's on another
It's
level.
it's-
And therefore we feel like it's not stable yet.
Really?
When you talk about the US dollar,
Yeah.
we use the US dollars here in Kenya. South Africa use US dollars. It's used globally,
Everywhere.
and therefore it's very stable. It's very stable,
Yeah.
unlike the cryptocurrency that
Right.
came the other day. And
So again, I don't know much about it, but from the little I've understood,
Yeah.
it seems like because it's finite, I think there's only, I can't remember the exact number. I want to say it was something like 21 million of the cryptos. I don't even know what the lingo is.
yeah,
But because of that, because it's finite, and because it's systems and computers that are coming up with this currency,
Yeah.
it's not a man,
It
it's not a government.
It's mining. Yeah.
Yeah, they're being mined.
They've been mined.
Isn't that more stable than a space where you know that there's a max, you know there's only this number of currencies that are going to be in the market, as opposed to the U.S. government, which they can decide, let's just throw in another, I don't know how it works, $100 million into the market, or let's put in, because that's not regulated. The government can just
That's
decide.
I think actually on the flip side,
Yeah.
that's the beauty of it. The fact that it's not regulated and it's traded globally, then it
Okay.
means no one economy can control it,
Okay.
because the amount of dollars circulating in the world every day is enormous. So no one country can come up with a policy that's gonna limit the forex markets.
Okay.
You get, because every day $5.3 trillion are exchanged in the forex markets. No one economy, no one company,
Yeah.
no one individual, no matter how rich you are, you can control this.
But then it doesn't.
We're talking about $5 trillion every day circulating in the forex
And
markets.
what gives it that value then? Where does the value come from? If it can just be flooded into the market, where does the value come? Unlike something like gold or oil, which
Yeah.
we know has an ending,
Yeah.
and doesn't that give things value?
Yeah.
More value? Even
Yeah.
life itself becomes more value. I think we're going into a whole deep world of like cryptocurrency. I don't know where we're going with this. This is probably a different conversation we ought to have.
But
But I'm so curious to understand that
Yeah,
world.
yeah.
But I do have a few more assumptions.
Yeah,
here to
but
throw at
it's
you.
basically a world of buyers and sellers
Okay.
coming together. It's a marketplace. View
Okay.
it like a marketplace. See how you go, one person comes with the vegetables, the other one
Right.
comes with the cereals,
Right.
and then you do the exchange.
Yeah.
It's the same for forex markets.
Okay.
But it's a global market meetup,
Okay.
whereby I come with my $10,000, you come with your $20,000, and then we meet on the markets. And then I'm gonna buy, you're gonna sell, and it's that kind of market.
Okay.
If without even dwelling too deep into it,
Okay.
that's how the market is set up.
I
It's
get
a
it.
marketplace
Yeah.
where everybody comes up with their capital, and then we buy and sell. We
Okay.
buy and sell.
Okay.
Yeah.
Another fact here, or assumption, statement I want to throw at you: trading in more currencies at once
Yeah.
is better and is good and has better returns
Okay.
than just dealing with one or two.
Dealing with one currency.
Yeah.
Well, it's partly true.
Okay.
Partly true, because what we do is we have an array of currency pairs which we analyze.
Okay.
And therefore, which means if today I wake up and I'm screening through the charts and I have about 7 or 8 currency pairs open, it means I'm able to get opportunities in, if I don't get an opportunity in the pair of the pound and dollar, then I can look for opportunity in another pair. And so if I have more arrays of currency pairs, then it means I can screen for more opportunities. Yeah,
okay.
but again, on that point, it's usually advice, don't jump from one currency to the next.
Okay.
Have a list of maybe 7 to 10 pairs that you analyze consistently every
Okay.
day. Just look for opportunities in these pairs
Yeah.
every day.
Yeah.
That way you get to learn and master the movements of these pairs.
Right.
Yeah.
What are the ones that you gravitate towards mostly?
I love the gold. I love the
Okay.
gold and the dollar.
Okay.
I love the pound.
Okay.
I mean, for me, it's not really even about loving it. It's about just pairs that I've been analyzing throughout time. And so what I'm looking for is opportunities. I don't want to be attached to them. I want opportunities to make me some money.
Right.
But I have pairs that I analyze every day.
Okay.
About 8 pairs.
Oh, okay.
Yeah.
All right.
Yeah.
Another one, I have to be incredibly intelligent in order to step into the world of Forex trading.
Not
Like you have to
true.
be genius level because it's
Not true.
No.
Not true. There's an interesting experiment that was done by 2 gentlemen,
Okay.
William and Edward, back in the day, about 20 years ago. It was called the Turtle experiment. And so one of them argued that Forex is an inborn talent. that you need to be born with in order to make money from the forex markets.
Okay.
The other gentleman argued that and said that no, you can actually train a random individual of this skill, and they can get to make money. And so these two people decided to actually do it.
Yeah.
So William went ahead and handpicked several individuals from different industries, picked a chef, picked a farmer, picked an accountant, about seven different worlds.
Yeah.
You know, picking different people from different worlds, and then put them in a classroom, trained them for, I think it was 90 days.
Okay.
Yeah. And then those people went ahead to make the greatest money managers in the world.
Oh, really?
Go look for it, the turtle experiment. And so it's not an inborn trait. Anybody can learn it.
Yeah.
And if you look closely, everybody is in the finance industry. If you have a loan, if you manage a small business, you know, if you have a bank account, you're already in the finance industry. So anybody can do it. You don't. It's not an inborn, you know, talent and kind of thing.
Oh, that's encouraging.
Yeah.
Another statement here: if I am smart enough, I can get rich very quickly, investing in forex trading.
No.
That's the only question, the only statement that you've had one answer, one word answer.
Yeah. It doesn't
No,
matter. It
I
doesn't.
know.
Yeah, it doesn't matter how smart you are.
Okay.
It doesn't matter how good you are. If you're good, then you're able to make money consistently. But you can't magnify your small capital and double it in a month or two just because you're so good at it.
Okay.
Yeah.
Okay.
So the discipline comes in hand because you know, if you're controlling your risk to 2% but trade at 1%, then it means it's only so much you can make, right? So if you're following the discipline and you're here for the long term, then it's not possible no matter how good you are. And therefore, unless you have a significant big capital, then you can make a good profit and grow it over time.
Okay.
But making money overnight, no.
No. Millionaires, overnight millionaires, this is not the place, everybody. All right, so just as we wrap this up, I want to see if I got it right. The determining factors as to how successful you can be in this space.
Yeah.
1, discipline. 2, ability to manage your emotions. That's greed and fear.
Yeah.
3,
the skill
an
itself.
understanding of the
markets,
charts and how to read them. And
sure. And that's what we teach at our company, 4th Street Consultants.
Okay.
We run an online course because we recorded online videos and classes and theory broken down in layman terms to empower people on these skills. And even to add on that, for our students who take up the course, we offer one-on-one consultation. For instance, if you took the course today and you're going through the course on your own, on your laptop or iPad, even on phone, and there are a few you know, items you don't understand, you can always call and say, I'm your student, I want to come tomorrow for one-on-one consultation with a trader. We're located at Karen, and so we offer one-on-one consultation for guys who take our course to just mentor them through the, you know,
and guide them.
And so we offer that on top of, you know, the online forex course that's available on our website.
Okay. Well, thank you so much, Joshua.
Thank you.
This has been such an eye-opening interview, and that's why I love this show too, that I get to step into a world that is completely different from everything I know and I'm used to. But I leave here the wiser, and I hope that you leave here the wiser too, and that you learned a thing or two about forex trading. And it seems like it's like you said, I think you even touched on this, it's not even just about managing money and assets, but it's also about being able to control your emotions.
Very
That's really
much.
cool. I love that.
I get to do that every day. I get to control my fear and my greed every day, and it builds me as, you know.
That sounds incredible. All right, thank you so much for watching, everybody, and thank you to Park Inn by Radisson. We'll be back here same time, same place, same station. See you then. All right, everybody, have a great rest of the day, and remember, manage those two, fear and greed. Fear and greed. Bye, everybody.